What up, people? Happy Friday, guys. I hope you guys are ready to finish strong today. Focus Trades members, let's kick some ass. I'll be with y'all at 10:30 a.m. for our live session, so I'm not going to be with you guys for the open. I want y'all to focus on the open all on your own, and then we'll bring it together an hour into the session as a team and do a live session. So what I want to talk about this morning, guys, to kind of finish out the week here, and as we head into the new week, no biases. Right? This happens time and time again in the market, guys. We go into, a nice little short-lived period of momentum, and then everybody kind of falls asleep at the wheel, right? We just start to kind of assume, right? And I'm mainly referring, guys, to new traders, but we get in these periods where we're pumping, and everybody just kind of assumes that we're going to continue to pump. But I don't want you guys to have any biases, right? As easily as we could certainly continue to rally here for the SPY and the Qs. At the same time, guys, you could make the argument that we're extended, and we certainly could sometime soon see a nice flush to the downside. Potentially, my favorite pullback, the reversion to the mean down to the 21 EMA. So, the market's pumping right now, guys, on low volume, which isn't the biggest deal. And, we kind of got this whole, stimulus bill hanging over our heads, right? And in our chat room, guys, and I'm sure in other chat rooms this morning, there's a lot of chatter and speculation about, man, if we get, if they approve the second stimulus deal, right, whatever the case is going to be, man, the market could really fly from here. Potentially, guys, but at the same time, maybe they're pricing that in. That's possible as well. Maybe this nice pump here is the big money pricing in the fact that we're going to get, a second stimulus package. Maybe it's big money pricing in the fact that we might be cutting payroll taxes, right? Just something to consider, guys. But as far as getting a gauge of what's extended and, what do we want to at least, be open-minded to potentially seeing a fade, my rule of thumb, guys, is that when we are 2 to 3 to 4 average true range moves, ATRs, when we're 2 to 4 ATRs away from the 21 EMA on the daily chart, we can continue to rally, absolutely, but there begins to, be a growing probability that we're going to get that reversion to the mean, right? So I'm not saying, guys, we can't continue to climb from here. I'm just saying don't be surprised if we run out of gas and fade a little bit, right? So using that rule of thumb, guys, we take a look here at the S&P 500, and we are 3 ATRs away from the 21 EMA. Again, we can pump further from here, but typically, guys, we get 3 to 4 average true range moves away from the 21, and we're going to get a nice flush on back home, right? That healthy reversion to the mean. So that's something to take into consideration. But the Qs, which are obviously leaving the market here, we're about 2.5 ATRs away from the 21. Could we continue to rally from here? Absolutely. Should anybody, in our group, should anybody watching here be surprised if we see a nice little flush down to the 21? Absolutely not, guys. It's just how the market moves. We move away from the 21, we move back to the 21, and then we move away from it again. So, yeah, we can continue to rally, but at the same time, we can see that healthy pullback soon. So don't be surprised, right? Things to take into consideration. And then you look at some of the leading names, guys, like Apple. Apple has 5 average true range moves above the 21 EMA. Now, could it continue to run? You bet. Am I looking to jump into Apple up here for a swing? Absolutely not. We then look at Facebook. Facebook is 3 ATRs away from the 21 EMA. Could it continue to run? Absolutely. Should we be surprised if we see a fade from here? Absolutely not. We then can go over here, guys, and look at, say, NVIDIA. One of the leading semi names, 2.5 ATRs away from the 21. Can continue to run, but we also shouldn't be surprised, guys, if we get the reversion to the mean. So keep this in mind over the next few days, guys, right? We don't want to run the risk of jumping into these potentially extended names, and then you're getting wiped out on nothing but a healthy pullback to the 21. So I know the big question for many of us is right now, is the market going to continue to climb higher from here? And if so, which names do I want to be looking to be trading? Well, based on this discussion here, guys, right, where a lot of our leading names are certainly extended, if the market does continue to advance, we're likely going to see those names move even higher. However, if the market begins to go sideways or, even pulls back a little bit, you look at something like NVIDIA, guys, a move back to the 21 would be a nice, healthy pullback. We look at Apple, And the reversion to the mean back to the 21 would be one hell of a pullback. Then I look at something, guys, like say a Tesla. Right? So if we're taking that mindset where a stock is doing, one of three things, guys. It's moving away from the 21, it's moving back to the 21, or it's resting at the 21, getting ready for its next move. Tesla looks like a stock right now. You got a daily squeeze, a 4-hour, you got an hourly squeeze, but more importantly, we're just chilling out here at home base, right? Holding support above the mean, much different, guys, than Apple. Right? Apple's in the stage of a stock that has already moved away from the 21. It can continue to do so, but the next stage of this thing's trend could be the reversion to the mean. Right? I look at Facebook with the same thought process there, guys. If we continue to see strength, sure. What the fuck? We continue to see strength in the market. Sure, Facebook can continue to go. But we can easily see that flush. So, the whole point, guys, I'm bringing this up is that, as we're kind of sitting here in anticipation of whether or not the market can keep pumping or potentially roll over a bit, a good form of risk management right now, guys, is to start looking for long positions in names that aren't going to get, their shit slapped if we get that healthy pull back to the 21, right? So if the indexes do begin that reversion to the mean, which names, guys, are likely going to fade the most? And to me, that looks like names like Apple, right? If the indexes begin to roll over from here, Apple's got a hell of a way to go, right? Facebook has got a hell of a way to go. But then I look at something like Tesla, guys, and Tesla's not extended, right? Tesla has already made its healthy pull back to the 21. It's just taking a breather right now, right? If the market, guys, comes in a little bit, I don't see Tesla as being one that gets completely, wiped out here. Because we're just chilling out at the home base. Another one, guys, I bring up here is Zoom. Right? Nice daily squeeze. And I'm sure, man, if the market continues to pump, there's a damn good chance this thing breaks out. But at the same time, guys, we're nice and close to that 21. So the market begins to fade a bit. You kind of get, a modest little dip here. And that might be about it. But the lesson this morning, guys, is that once we do get 3 to 4 ATRs away from the 21, it doesn't mean we can't continue to rally. It just means that there's a growing probability that sometime soon you should expect to see that reversion to the mean or close to it. So it's simply something to take into consideration, guys, as you're looking for long positions, as you're thinking about risk management, and just generally trying to get a sense of, what's a good entry and what's a little bit of chasing. That can be really helpful. So I look at Tesla, and I don't feel like I'm chasing anything here. We got squeezes all over the place. And we're just chilling out at home base, right? We're waiting for this thing to make its move away from the 21. Then I look at Apple here, family, right? And sure, man, we can come jumping onto this thing, calls, put credit spreads, but man, a nice healthy reset for this thing is going to be one hell of a dip. So keep that in mind, guys. One thing we've been discussing in the group lately is that, as we're swing trading these stocks, we want to make sure that, if we take an entry, we don't want the pullback to the 21 EMA to wipe us out. So what I mean, guys, is, we look at Apple here. I wouldn't want to go with a put credit spread for a big swing trade selling the 420s. Why? Well, because if we lose momentum here, there's a good probability we're making a reversion back down towards that mean. If I'm shorting puts at 420, 430, they're quickly going to get wiped out. Same thing with the calls here, guys, right? These calls are so inflated right now. You got so much premium caked in, implied volatility is through the roof. You come jumping into calls here at the tail end of this move, Apple goes sideways for a day and you're going to lose all sorts of premium. So just things to consider, guys. Like I mentioned, there's all kinds of speculation about stimulus deals and payroll taxes, this, that. That could be breaking news. That could send the market higher, when and if that happens. At the same damn time, though, they could be pricing that in right now. All things to consider. So that's my thoughts of this Friday morning, guys. I'll do the scan here real quick for the squeezes. You can pause this and then take a look if you're interested. Not going to go through all of them with you here. But that's it, team. Let's see. All right, so there's our daily squeezes. You got Amazon, Google, Visa, Tesla, Zoom, Micron, Roku, ON, BLIND for a 4-hour. For the full hour, we have got Microsoft, Tesla, LRCX, and then for the hourly here, family, drum roll. Drum roll, drum roll. For the hourly, we got NVIDIA, Qualcomm, and ON as well. A whole bunch of semiconductors there. So I wish you guys the best of luck today. Go out there and kick some ass. But remember, it's Friday. The last thing we want to go do, guys, is sacrifice our peace of mind heading into the weekend. That means if you've had a profitable week, don't go ahead and ruin that by forcing the issue. And if you've lost a little bit of money this week, don't go out here today, guys, and dig yourself a deeper hole. Nothing sucks more, and I'm speaking from experience, nothing sucks more than making some stupid decisions and then you gotta deal with it all weekend just waiting for the market to open up on Monday to come back and seek vengeance. Right? Not a good combo. We don't want to be ruining our weekends, and we don't want to be revenge trading. So, above all else, guys, make sure you go into this weekend with your peace of mind intact, and then we can attack from next week. So, I appreciate you guys for watching. If you haven't already, go ahead and subscribe. You can check us out at focustrades.com. You can check me out on Instagram at focustrades. And for those of y'all in the group, I'll see you an hour after the open. We'll jump into a Zoom session, and we're going to get to work.